Hi everybody, this is Dave Aquino from Value Charts, and this is the free video for Tuesday, September 1st, 2015. I am looking at SPX. Now, yesterday I mentioned watch out for the squeeze that is going on in SPY, SPX, and we basically had a very strong continuation pattern that broke lower yesterday. If we look at the 5-minute chart, you see, actually, here it is. We had a consolidation pattern most of the day. Squeeze came in right at 1 o'clock. We started to break lower right here at 1:30. Ran lower, even moved up a little bit at the end of the day, but this is where the break occurred yesterday morning, last night, and then into this morning. And right now, we are down 2.5% in the S&P. Had you just taken that squeeze trade to the downside, again, it was in a sideways channel for 3 days. Momentum started to turn red, and here was where the squeeze fired off. And again, that resulted in a 2.5% in the S&P 500 index. That can be a pretty significant profit if you're trading debit spreads to the downside and directional puts. Now, what's interesting is from the low on the 25th to the high on the 28th, you actually already put in a 618 retracement, or very close to it. It came down to a 50% retracement in the first hour. Now we've been just consolidating on this support, and we're starting to break a little bit lower. So this target range that I set up yesterday between 1930 and 1920, we hit it today. Now, we could get a continuation move to the downside. However, I'm not quite sure if that's going to happen. Let me show you on the daily. Okay, here's the daily chart of the SPX. So we dropped here on the 24th, 25th, and 26th. We moved back into the 8-day EMA, and then we're starting to fall back. Now, this is still the 50% retracement from the low to the high, but we're sitting here. It is almost a yellow undervalued level. If you look at this as a potential double bottom in the SPX, you can easily see that even based on this momentum, we're halfway back already. If we go down a little bit more, we're probably just tip into a red histogram bar. But really don't think there's any way for the secondary movement here on the second low is actually going to match the strength of the bearishness on this first set of lows. With that said, this will turn into a bullish divergence. So that way we can actually power higher. And my thinking is we're going to move back into the 2040, 2050 area based on the support level that was previously holding up this channel. Now it's resistance. So I think we're going to bounce, hit 2040, 2050, roll over as a last kiss move, and then drop from there. Again, it's kind of interesting that it would occur over a double bottom, but we don't even have to reach these same lows. You could make a yellow undervalued here and then start to move higher towards the end of the week. But that is the SPX trade. Just going to watch it, see how it develops. There's two possibilities: a direct retest of 1870, but that should turn into a bullish divergence. It can stall right here at the 50% retracement and then go up, or it could just drop and fall directly from here through support and just continue to fall. I doubt the third scenario is likely. I doubt the first scenario is likely. I think we're going to make a moderately undervalued, consolidate, and go back up. Okay? Again, that's what you could possibly have in the S&P 500. Thanks a lot.